All right, everybody, welcome back to News for Nerds. It is officially the year of the fire horse. I hope you are buckled up because this year feels completely different from last, at least in my area. Seems like people are coming out of the woodwork, just tired of sitting around, sitting on their hands, which is pretty much what 2025 felt like. And ever since that ball dropped in the new year, and especially since the Lunar New Year, the market has been pretty hot, at least in Hudson County. See sales going on and getting multiple offers within a couple days. I see buyers, making really good offers right off the bat, getting their offers accepted, which is all great news. I love to be busy. I love to see you all out there. I love to see everybody making money and making good housing decisions and all of that good stuff. So let's kick it off, shall we? It is March. Happy St. Patrick's Day. Happy Year of the Fire Horse. Whatever you celebrate, cheers to you. All right, as always, we're going to take a look at the local highlights around Hudson County, and then a few other things about the real estate market in general. I'll hit some news, and I'll try to chop this up a little bit so it's easy to follow. All right, so first up, a little bit of housekeeping. This is about the partnership between Compass and Redfin. If you have no interest in this, feel free to skip ahead. But if you have seen the headlines and you're curious, this is kind of my high level overview of what's going on. So basically, Compass and our CEO, Mr. Refkin, have been battling Zillow for a while now, basically about sellers' rights and just the fact that it's really hard to list anything off market. And I will caveat that and say, not every house, every seller situation is appropriate for what Compass can offer. Selling, at least listing things pre-market as a Compass exclusive or coming to market. That is really, it's tailored to a specific situation or several situations. So it's not right for everybody. We're not trying to push everybody into that. But Zillow made it very hard for us to do that, basically threatening us and anyone that works with Compass saying, if you do this, and you violate our rules, we won't even put your listing on Zillow when it does go on MLS. And obviously, we didn't think that was very cool. So we've been battling that. And, so every time a Compass listing goes to coming soon, which is still pre-market, still pre-MLS, it's going to show up on Redfin as well, which basically exposes that house, that property to 60 million more buyers, which is good news. It's good to be able to have options. I do not like monopolies, and we're certainly not trying to do that. And we certainly don't like if other companies are trying to do that. So this is a great partnership. What that means for you is more exposure sooner, no public days on market. Anything that is pre-MLS has no recorded price drop history and no recorded days on market. If someone looks at your listing, that data is not there. It's just your property, the price, the photos, everything that we want to share, and nothing like that. So no visible price drop history. And serious buyers can still approach us agents about your property. Because of this, I think in this pressure, Zillow actually backed down from saying they're going to ban our listings and your listing from their website if you decide to do a coming soon longer than they're allowing, which is basically 24 hours, at least in this area. So that's a small victory and good things for everyone that wants to take advantage of, and your property kind of fits that scenario. Moving on. All right, let's get started with some local stats. First, we're going to take a look at downtown Jersey City. That is the 07302 and 07310 zip codes of Jersey City. What I want to highlight here is a trifecta, which we do not see very often. This is three stats that when they all go up is pretty impressive. Usually we see two of these go up and one of these go down because it's an indication of like supply and demand. But right here we see average sold price, and we're comparing last month compared to the year before. So 2025 to 2026, wrapping up February because that's the most recent data we have. So average sale price went up 37% for your average home sale in downtown Jersey City. Not only that, but the number of sales increased 45%, and the number of new listings went up 23%. So again, it's very rare that we see all of those things go up. Usually if there's a ton of new listings, the sales price is going to go down a little bit just because there's more to choose from and buyers take their time. Um, the only thing that I see like correcting here a little bit is the average days on market went up 15% from 34 to 40. Actually, it went down. Excuse me. I'm reading this backwards. So that went down also. So that's like a four-fecta, a quad-fecta, pretty rare. I would be impressed if all of these stats hold steady for months at a time. But I think it's a big indication of what I mentioned before about this year starting off with a big boom. Uh, there's a lot of people out there, even more to choose from, clearly, and prices are going up. So this spring right now so far is so good, especially in downtown Jersey City. All right, let's zip up to another neighborhood of Jersey City, the Heights. This is the 07307 zip code area where we're seeing a little bit more normal of an adjustment here, or not even adjustment, but normal stats where average sold price has gone up 13%. But I feel like that has a bit to do with the number of sales that happened, which is actually down almost by half, 9 compared to 17 last month compared to last year. And the number of contracts down 30%. And new listings went up. So, um, kind of more classic what we see with supply and demand. Sales price is going to go up when we have less contracts being signed or less things to choose from. Although we do have more listings. So, the things that are selling up there are the nice things that are selling well. I think that's the biggest reason for that price shift there. And also, I would be remiss if I didn't mention, if you're not from around here, or even if you are, you would remember February was pretty brutal when it came to storms. We had 2 back-to-back huge snowstorms, so I think that interrupted the market quite a bit. Obviously, in some places more than others, but the Heights is one of those places where it definitely had slower foot traffic. All right, let's zip up. Boom! Look who's back with a fresh haircut and a new outfit. It's your boy. All right, we're hitting up Hoboken next. The major movement I'm seeing here is in the signed contract range. Look at this. We're up year to date 20% compared to last year. And just in this last month, we have 23.7 more signed contracts. And you look at the rest of the stats, they're all down a little bit. So number of active listings, number of contracts, the average sale price, all of that down a little bit compared to last year, at least so far. What that tells me is mainly that the things that are moving right now are in the more affordable price range, not necessarily, bad inventory or less desirable or anything, just more affordable. Like the 1 and 2 bedrooms in Hoboken are getting snatched up really quickly. They've been really popular. For example, I listed another apartment at 110 Washington Street downtown. Very good, like 2-bed, 1.5 bath starter or entry level home. This is the 6th one I've sold in this exact same building. They're all pretty much exactly the same. And this has been by far the quickest one to sell. We had like 5 offers on it, accepted 1 over asking. And yeah, so just prime example of like very good entry level, like first time home buyer home that's affordable downtown, looking, no expensive extras like parking, elevator, private outdoor space, things like that really kind of increase the price. That one was very desirable, obviously, and I'm seeing a lot of the same thing. We'll see how that plays out over the next couple months. All right, let's take a drive on up to Union City, where we're seeing a bit of a reverse trend of what we saw in 2025. So if you've been watching the show for a while, you will have noticed that a lot of my reports and news for nerds in Union City in 2025 were that is a great alternative, affordable alternative for people looking to buy a primary residence. And we're getting kind of priced out of or just comparing to Jersey City Heights, let's say, that's very close. And a lot of people buying condos up there, and the prices were going up in 2025. So far this year, and certainly for last month, we've seen a little bit of an opposite trend here where average and median sales prices are down, number of sales and sales volume also down. Not necessarily a bad thing. If you're trying to sell right now and you just bought last year, which doesn't happen very often, these aren't like great comps and numbers for you. But I would not worry. I think that this is really a reflection of what's been happening with mortgage rates. So last year, mortgage rates were pretty high, especially compared to this year, although they had been trending down over the past 3 years where they were really high above seven. Um, and as people were, budget conscious and monthly payment conscious, Union City was a great place to buy a primary home. I'm going to sidetrack here. Primary homes are pretty much the bread and butter here in Union City because of rent control and uh, the rules up there for buying an investment property or owning investment property very restrictive. So not a lot of investors up there. So a lot of primary homes being sold up there, especially last year. Now I feel like now that rates have come down a lot so far this year, um, and people's buying power is a little bit stronger, they're going back to um, the places that they really wanted to buy if Union City wasn't it. So you probably afford something similar in Weehawken, maybe even Hoboken, although you're probably looking at like a bedroom or two less, or certainly the Heights where taxes are a bit higher. But if you like that vibe a little bit more than Union City and your buying power goes a little bit longer or stronger or gets you more, then I think it's doing the reverse of what happened last year, and more of these buyers are staying in their primary areas of interest. So another good spot to keep an eye on is Union City here. We'll see if this trend reverses over the next few months. All right, so I obviously wouldn't be doing my job very well if I didn't talk about mortgage rates, which have been in flux lately. I will say overall, they are much better than they were certainly 3 years ago, and they've been trending down, and they're still lower than they were this time last year. But if you've been following closely, you would have noticed right before the Iran conflict started, um, they dipped right. An average 30-year fix dipped actually below six for the first time in over 3 years, which was awesome news. We've certainly seen a lot of buyers in the market, especially compared to pretty much all of 2025. People are definitely just tired of waiting on the fence and getting back on there, getting back out there and finding properties, which is great for the market overall. But people that are watching this closely, as I have been seeing that mortgage rates have actually, especially since the Iran conflict started and all these problems with the oil and the Strait of Hormuz, basically the trend going higher. This is basically because it's tied mortgage rates are tied very closely to the 10-year yield, which has been increasing ever since that started. So the last time I looked, it was about 4.4, and the 30-year fixed went up to around 6.5. So we have seen it be very volatile because of this. And I have seen just kind of some headlines saying, well, wouldn't inflation create a recession and then lower mortgage rates? In theory, yes, this could happen. But the good thing, or the important thing to remember, is that recessions take a long time to actually play out, and the short term volatility is actually more important than that. So a recession is just kind of one of those ifs, ands that we can't really count on. We hope we don't see a recession. Inflation certainly has been a little bit of an issue lately because if you don't have oil, transportation of goods obviously costs a lot more. So I am one of those many people that is kind of following this closely, and for just strictly work and business reasons, I'm hoping there's a end to this conflict soon. Politics aside, I feel like conflict is never a good thing, and if we can get some oil and keep these things moving along, it will certainly help all of us, especially in the housing industry. So I wouldn't be too worried about it. I mean, mortgage rates are what they are. You really can't affect that. You're going to pay for it one way or another. You certainly buy down your mortgage rate, which is always an option and always has been. But at the end of the day, the most important thing you can do for yourself is just to make sure when you're looking at properties, you're factoring in not only your mortgage rate and what your monthly payment is going to be as far as a mortgage calculator works and goes. Obviously, you want to have your interest rate tied in there along with HOA if you have it, and your taxes. And bottom line is, if you can afford it, then it makes sense. And at least you get to lock this in. Whereas if you've been renting for a long time, especially lately with how hot this, at least the local rental market has been, like when you're renting, you're at the mercy of someone else, and they could be jacking up your rent every year, and that's something you can't control. So when you buy a house, you get to control that. You get to kind of take control of a big chunk of your expenses, and your finances. And if it's something you can afford or will soon be able to afford, with your income going up as you get older and more wiser, and more qualified for those higher paying positions, then that is really what's important. So if you lock something in now before rates go up even higher, if they do, great. And if they trend downward again, as I'm hoping that they do, especially if a conflict comes to a resolution, you always have the opportunity later on down the road to refinance and make those even more affordable and keep some money in your pocket. So that's my 2 cents on mortgage rates right now. Again, one of those things I am watching daily, and yeah, seeing how they factor in. But at the end of the day, housing market is still very strong here in Hudson County, and that's how we like it.